The Fed has just raised interest rates again in the FOMC meeting yesterday. What will the impacts be on Bitcoin and the crypto markets? Welcome back to the Virtual Bacon channel. My name is Dennis and I'm a crypto angel investor, and I have invested in over 100 crypto startups in the past 5 years. So in today's video, we'll break down the details of the latest FOMC meeting and Jerome Powell's speech. We'll analyze Bitcoin's latest price reaction from this result. We'll also look at the future predictions from other analysts for when the rate hikes will actually stop. And I will give you my prediction for the timeline of this going into the rest of the year and 2024. First, here's a summary of the latest FOMC meeting. So the meeting just happened yesterday, and the expected rate hike going into the meeting was 25 basis points, and the actual hike rates exactly matched these expectations. This means interest rates are now at 5.5%, which is the highest it's been since 2001. Now, inflation has been steadily falling for the past year down to 3%, but it's still not at the Fed's target at 2% just yet. Historically, the Fed has been raising rates at 75 basis points per meeting. Then, as time went on, inflation got better and we have started to slow down. So it first slowed down to 50 basis points and then to 25 basis points per meeting. And now we're definitely getting to the end of the rate hike phases. Instead of raising 25 basis points at every FOMC meeting, the Fed is now spacing out the rate hikes, and they're not doing it at every meeting. Quite soon, I'm expecting the interest rates to have reached its peak and the Fed to pause the hikes, and eventually they will start making the rate cuts. Before we break down the exact details and Jerome Powell's speech, let's look at the market's reactions on Bitcoin's chart. First, we have to know that just because interest rates are super high right now doesn't mean the current market for risk on assets like Bitcoin is bad. In fact, it's quite the contrary because markets are always forward-looking. Most people are already prepared for this 25 basis points increase going into the meeting. So even though the main impact will still be felt in the economy where businesses will suffer and consumer spending will continue to decline, as long as this policy seems to be working, the market speculators will be happy. In other words, as long as the rate hikes are slowing down and we are receiving smaller and smaller percentages at each meeting, the markets will price that in early and buy up assets early in anticipation of the rate hikes eventually coming to an end. And that's why we're seeing Bitcoin holding relatively still after this meeting. Even though the FOMC meeting is such a big event, there wasn't any price movement on Bitcoin whatsoever. People have already priced in this event long ago. Now, my short-term expectation for Bitcoin is still for there to be a short-term correction coming sometime in the next month or so. We have talked about this significant resistance on Bitcoin at around the 32K level, which dates back all the way to the beginning of the 2021 bull market, as well as the first correction in the summer of 2021, which both stopped right at 32K. So all the people that were aiming to buy at around 30 to 32K got completely flushed out in the bear market, and now this level acts as super significant resistance. And you see price topped out at exactly 32K in the recent rally in the third week of July. On top of this, we're seeing a bearish divergence on the weekly time frame for Bitcoin with the RSI. So price has made a higher high in the two recent peaks, while RSI has made a lower high. This is usually a bearish divergence that leads to a price reversal. In this case, a reversal to the downside. I'm not saying we'll see new lows on Bitcoin, but I just expect a short-term correction to come sometime soon. Because this 32K resistance is proving to be quite significant. We've had such bullish news for Bitcoin over the past month with the Bitcoin spot ETF, with the FOMC meeting being relatively dovish, and with the Bitcoin halving leading up so soon. All in the meanwhile, Bitcoin's price have had really hard time breaking above this 32K resistance. And that's why I'm watching this 32K resistance super closely. If Bitcoin can break above this 32K resistance and close above it on a weekly time frame, I will gladly shift my perspective, because this will confirm the continuation of the uptrend with a higher high above the previous high at 32K that we failed to break, and it will show a higher low above the previous low at 25K. But until that happens, I'm still on the fence as a lot of signs are pointing for a correction coming. In terms of the correction targets, I'm looking at the support levels at 25K and 20K. So 25K was the last higher low here that also dates back to the August rally in 2022, where it acted as significant resistance. This is the first significant support level that I'm watching for Bitcoin, but I don't think this level will necessarily hold super strong. After such a strong rally for 6 months straight, a more realistic expectation I have is for Bitcoin to wick into this range between 20K and 25K, but very quickly bounce from it. This 20K wick here, as you can see, we made in February of this year when we had a super large Binance FUD, is the bottom line I have for Bitcoin right now. So as long as Bitcoin respects this 20K support and quickly bounces from it, I would still remain bullish on Bitcoin for the long term. Only if 20K gets broken will I change my long-term perspective on Bitcoin and shift to be long-term bearish and really consider what's going to happen for the next couple years. So all in all, kind of in a standstill right now. 2 scenarios I'll be watching for potential trades. If Bitcoin breaks above 32K and confirms it, this will show even stronger uptrend in the short term, and I will gladly shift my bias and continue to stay long. But if Bitcoin comes down for a correction, I think it will still be healthy, and in that case, I will aim for buying more between 20K and 25K. Now, going back to the inflation data and the rate hikes. Inflation has been steadily falling for the past year. It peaked at 9% annually in June of 2022, but has since fallen to 3% in June of 2023. So people are clearly expecting the rate hike cycles to be over soon based on this data. We're getting quite close to that 2% target. That's why this FOMC meeting did not cause any negative reactions in the markets. People are quite happy holding their risk on assets like equities and Bitcoin, as long as there isn't any surprise results from the meeting. Moving on, let's talk about Jerome Powell's speech. He actually gave some subtle hints that are more dovish in the Fed's stance, and we'll break this down. So in the last FOMC meeting in June, Jerome Powell confirmed there will be at least 2 more rate hikes coming by the end of 2023. However, in this meeting, Jerome Powell did not confirm another hike scheduled for the September meeting. Instead, he only said that another rate hike is possible only if the data warrants action. Quote, "It is certainly possible we would raise the funds rate at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting, which effectively means a pause." He also noted the Fed will be making decisions on monetary policy on a meeting-by-meeting basis going forward. So essentially, the 2 rate hikes that were confirmed before, one was executed this time, but the other one is uncertain now. It will only be meeting-by-meeting based on the new data. With this shift, they are now reassuring the public that there will be better news to come with each meeting. They're easing up their language as they don't want to back themselves in the corner. Another good news for us market speculators is that Jerome Powell acknowledged that inflation is coming down and the Fed is no longer forecasting a recession. This means they are getting ready for the end of the tightening cycle. However, he noted multiple times that the labor market still remains very tight and needs to be softened before the rate hike cycle ends. This means they want the labor market to cool off and decrease the ratio of open jobs to the number of unemployed workers. There's usually an inverse correlation between the unemployment and inflation. When the labor market cools down and the demand for workers falls further, the wage inflation will also fall as employers will no longer need to bid high wages for new employees. This is another key metric that the Fed is watching to determine the end of the rate hike cycle when they're happy with the inflation. So with all the mixed signals, Jerome Powell said that they will be taking decisions one meeting at a time and they will be dependent highly on the data. Definitely watch out for the new jobs reports coming in the following months. Okay, here are the market experts' predictions for the rate pause and the cuts coming in 2024. First, there are 3 more meetings left for the year. The next one is in September, then in November, and the last one in December. Let's look at the predictions data. Majority of the people seem to agree that interest rates have peaked at 5.5%, which is 550 basis points as you see here. A smaller minority still thinks there will be another rate hike coming sometime in the next 3 meetings in 2023. This accounts for roughly 20 to 30% of the analysts who thinks that rates can reach 5.75% in another hike by the end of 2023. Regardless though, it's good to see that there is essentially a consensus that rates have either already peaked at 5.5% or will stop at 5.75%. which means there will be at most one more hike of 0.25% coming sometime this year. Even the most hawkish predictions still agreed if there is one more hike, it will come by the end of this year. Finally, let's look at the Fed's plans to pause rate hikes and when the rate cuts might actually happen. Majority of the analysts agree that easing will come sometime in 2024 and will start between the months of March and July. By the September 2024 meeting, there is essentially a consensus that the Fed will start to cut interest rates. Now, a bit of look back in the history. During the last tightening cycle, the Fed paused the rate hikes for 9 months before finally starting to cut the interest rates. So this time around, if we're looking at the last rate hike in November or December of this year, a 9-month pause will lead to July of 2024 before rate cuts actually begin. A lot of people are saying the Fed will wait for some part of the economy to break and use it as a reason to start easing early in the first half of 2024. Essentially, the Fed will keep rates around the current level until something breaks. This could be the labor market, for example, which is still strong right now. So to summarize the timeline for the pause and the eventual rate cuts, it is expected that the interest rates will reach its peak sometime this year at either 5.5% or 5.75%. It could be already peaked at the latest meeting, or it could be after the September, November, or December meetings. After the interest rate reach their peaks, the Fed will take a long pause in their policy in which the rates stay the same for as long as 9 months. This is the longest case scenario where easing will only start after July of 2024. A shorter time frame is also possible. If we see something break in the economy like the labor market, the Fed could step in to save the economy and use this as a reason to start easing early. In this case, the pause could last only 4 to 5 months, and we could see interest rate cuts as early as March 2024, according to most of the expert analysts. This is the best case scenario that the bulls are arguing for. In terms of percentages, only about 22% of analysts predict the ease to happen in the January meeting of 2024. And around 45% of analysts believe that easing will start in the March meeting. 76% predict that it will start in May, and then 83 and 93% predictions for sometime in June and July. Regardless, all of these timelines match up nicely with the next Bitcoin cycle. We have the next Bitcoin halving event happening in April or May of 2024, and the Bitcoin spot ETF approval coming before then as well. So really, 2024 is shaping up to be a hell of a year for Bitcoin with these 3 massive catalysts. Okay, that wraps up today's video. If you want more day-to-day crypto alpha, make sure to follow me on Twitter at virtualbacon0x. That's the best place to get my unfiltered thoughts on the crypto markets. Remember to subscribe, and I'll see you in the next video.